Good morning, fellow option traders. This is Jeff. As you recall, back on March 8th, I opened up a test trade on Google. And what it was a triple calendar, which I'm showing here. And we have a calendar with puts at 5:55, 6:05, and a call at 6:60 with April and May expiration. And this is what the profit tent looked like back on the 8th when I opened it. The other thing I wanted you to note here is the volatility, the implied volatility of each option. And note what it is. For instance, in the 555 it's 31 and 28 and 27 and 28 and 26 and 24 respectively. What you see in the background here is what it looks like today at this very moment, and you can see that it is currently up $197. And if you look at the implied volatility, which is very important on calendar trades, to make sure that you keep an eye on this volatility and you don't suffer from any sort of collapse, especially in the back options, which would be the options for May, because those are the long ones, and if volatility drops when you want to sell them, they're not going to be worth very much when you want to close this trade. So that's where the danger comes in, is in these May options if volatility collapses, as they say. Which is why, usually you're always looking for higher volatility in the back month on a calendar. But, that wasn't a criteria for my choice here for doing this Google trade. So let's go back to the opening of it and take a look at this volatility here. And if we can just kind of match it up with what we're looking at on the current volatility, and we just look straight across here. Let me bring this down a little bit more here. I think we're off by one. There we go. So 31.28, 32.6, that's okay. That's not a big deal. And on down the line, if you would like to, you can pause the video to better compare the volatility between the two. But what I wanted to point out here also is that this trade is currently up about $200, or if we, when I calculated this out, it was up $222. And since I paid $990 for these 3 calendars, and I only just did one at each one of the strikes, that cost me $990, and it's up 222, so that gives me approximately a 22% profit so far based on my risk, which is not too bad. But visual is always good, and that's why I made this very, very short video to go along just to give you a status on this particular trade. So another thing I want to point out is this line right here is the current price. 629.65. My eyes are getting bad. I'm really having a hard time reading some things. Maybe I need stronger glasses. And the highlighted blue here from this price down here around 370 up to, or 570 up to around 688 is one standard deviation based on expiration date of 4/21. So normally the price should fall within here between now and the 21st, which is expiration, and actually I think the 20th is Google's earnings. So we definitely want to be out of it by then. Kind of hoping that volatility will go up a little bit. I'm not real excited about having the Aprils go up very much, but the May I'm hoping will go up just a little bit more, so that when I close these and I sell those May longs, that I can get a decent amount of money for them. The other thing I want to show you here is the theta right in here. The theta at the current price is $21.49. So again, theoretically, what that means at the end of today, if the price doesn't move at all, we should get a $21 bump in our profit, even though right now it's saying $14.85. You know, everything's always changing all the time, and the time value is always being recalculated. So we just wait till the end of the day or opening tomorrow to see this $21.45 added to this profit and loss since the open. The other thing I want to do is just do a quick look at the chart. And let's see here. I want to like compress this down so that we can see the break-evens on this trade, which I put in this chart. These gray lines are the break-evens, and this is their earnings, which is on the 19th. So between when I opened it over here on the 8th and when we get close here, probably the week before earnings, say around April 12th or so, is when I would be thinking about closing this. And ideally, depending on where it falls, we might be able to pull $500 or so out of this trade, which would be fine with me, which would be approximately a 50% profit or gain on the risk. So here's the chart. The green highlighted box that I drew here is where I want the price to wiggle around in, preferably, you know, up around where my actual strikes are. For instance, oops, let's go back here. The 555, 605, and 660 here is where we're going to get the most profit. So if we're looking at this chart, we want it to be around this 555. What did I say? 555. Memory's going to pot here. 605 and 660. So 605 around here, and 660, which would be up around here. So I just split this into threes, and that's ideally where we would like this to end up. But time will tell. We'll just keep an eye on it. It's at its actually least profitable point practically right here at the 630 price. We would like to have it move more towards where these poles are in these tents. So again, this would be a good trade for a profit tent portfolio, which is the Trading Pro system that I talk about on my blog site. So when you get a chance, check out my blog. If you aren't sourcing this video from there and you're just doing it right from YouTube, you want to check out the blog and take a look at the Trading Pro system and all the wonderful education you can get out of that for a pretty decent price. So again, thanks for your time. This is a pretty cool trade. I looked at a weekly one similar to this on Amazon this morning. I just a little bit too afraid to pull it off right now. I want to see how this one works out, and I may start doing this on weeklies too. So thanks for your time. Happy trading, and good luck to everybody.